TCS's 16,000 crore rupee buyback is now open for shareholders to tender in their shares. TCS is planning to buy back roughly 5.33 odd crore shares, and the price at which they are going to buy back these shares is 3,000 rupees versus the current market price of somewhere between 2,850 to 2,900 rupees. Now, before you, as a TCS shareholder, consider tendering in your shares, there are roughly three aspects that you should consider. Firstly, the taxation aspect. Since July 2019, the finance minister has now imposed a buyback tax on companies. So before TCS will actually pay you the money when you tender in your shares, they'll have to themselves pay a 20% buyback taxation to the government. And then after you get that buyback money in your hands, you will not be subject to any taxation on that gain, whether it is long term or short term. Let's compare that to when you sell the shares in the market. That's when you have the LTCG tax of 10% for gains above 1 lakh rupees, or the flat rate of 15% short-term capital gains if you sold your shares owning it less than 1 year, will essentially kick in. So you'll have to sort of figure out where you stand on both of those aspects and then make a decision on the tax front, because do remember the company is still paying that 20% tax, so it is sort of something that you should consider all in all. Yes, you will not have to pay anything from your own hands as such if you do tender in your shares in this buyback. Now, the second aspect to consider, of course, and this is with respect to profit opportunity. So 3,000 rupees per share, 5.33 crore shares. The amount that is reserved to buy from retail investors, that's individuals like you and me, is roughly about 15% of the buyback. The fact is that TCS has just 0.5% of its shareholding which is held by retail investors. So we have Motilal Oswal saying that given these factors, given the eligibility is so low, the profit actually that you will make is going to be pretty small if you do tender in at 3,000. And let's not forget, the stock is already trading at roughly about 2,900 rupees. So now the arbitrage as well is extremely low. And finally, of course, we'd like to talk about the fundamentals, the prospects as well of TCS. It is one of the most expensive IT stocks among the large ones, of course. I think at roughly about 26 times the FY22 PE versus Infi, which trades at roughly 20 times. HCL Tech is even low. But there is a reason for that. TCS, of course, is a brand. It's one of Asia's largest IT companies. It's got a strong balance sheet, which is obviously evidence given the fact that they're ready to pay out 16,000 crore rupees for a buyback. Got a great digital vertical as well, which is said to be the next big thing. Accenture as well has given a thumbs up to their earnings guidance, their own earnings guidance, which is boding well for the entire Indian IT environment. So all of these are pretty positive. We had Rajesh Gopinathan, the MD and CEO of TCS, telling ET now that we could be looking at double-digit growth. The momentum is there. So on the fundamentals, things look really great. And also, most importantly, TCS historically has a great payout ratio when you combine dividend and buybacks together. On an average, cumulatively, if you look at the last 5 years, it has paid out almost 80%, of its profits to investors in different ways. So that as well is a big thumbs up. So make sure you consider all of this before you consider tendering in your shares for the buyback, which, by the way, is open till the 1st of January.